Hi, good morning, everyone. I am Albert, and welcome to Siloam's 2026 first quarter earnings call. It's my pleasure today to host you together with our CEO, Ibu Caroline Riyadi, our President Director, Bapak David Utama, our CFO, Bapak Daniel Kwa, and our COO, Bapak Sumantare. Again, following the presentation, there will be a session for Q&A. You can see the Q&A box. Feel free to drop it there. If you don't see it, you can click more and there will be a Q&A box. With that, let me share my screen and I will hand the stage over to Pak Daniel.
Thank you, Albert. Good morning. Welcome again, dear investors and analysts. Again, thank you for your continuous support of Siloam International Hospital throughout this time. But I think here you will be, pleased with the results that we are here to announce. For the first quarter of 2026, you do see that the results from the transformations that we've been telling you so much about in regard to the move to the network and archetype has started to bear fruit, as you can see in Q4 of last year. And we have seen this performance improvement sustain into Q1 of 2026. So as management, we are very proud to see that the strategy is basically providing real results. And we have been able to execute the visions that we have. And you can see that reflected in the numbers that I'm about to present to you today. First, let's look at the revenue. Revenue is 2.55 trillion, 8.4% increase year on year. EBITDA at close to 750 billion, that is at 11.8% improved upon last year, with net profit improving by 14.8% to 294 billion. As you can see, the quantum of increase from revenue down to EBITDA down to net profit is increasing, basically demonstrating that the margin has also been well managed from the top down to the bottom. But there's a few important things to highlight in here. As you can see, the EBITDA margins, we have been able to sustain at around about the 30% mark. Since we kind of hit that, but 30% in the third quarter of 2025. Again, I've always mentioned to you that 30% margin is what we're aiming. When we were doing the transformation to the archetype, there was some transitional costs, but we have seen that largely iron out, which is again what I told you when I first presented in the first half of last year as well. Beyond that, as you can see, revenue CAGR from 21 to 25 for 7%, EBITDA CAGR of 10%, net profit CAGR of 14%. With the net profit now ending at 11.5%, I think all numbers is demonstrating that really all cylinders are firing. We're seeing growth coming in from some of our new hospitals, which Caroline and Samantha will talk about later. We are also seeing that the contributions for insurance has continued to improve. Next, moving on to the payer mix. In regard to the payer mix, as you note in here, the BPJS JKRN segment has decreased, from 17.4% in first Q of 2025 to 16.1% in the first Q of 2026. But as we mentioned before, what we are seeing is that the private and OPE is just growing faster than the BPJS. If you look at 1Q25 to 1Q26, BPJS grew marginally at 0.1%, whereas corporate insurance grew by 8.7%, and private OPE grew by 11%. I think this is part of reflecting part of the strategy from Siloam to increase our acuity and complexity, and therefore, but as part of that, we are also attracting more premium and private insurance patients. Moving on to margins. Margins, as I mentioned earlier, has improved from 28.5%, which is the EBITDA margin in first Q of 2025, to 29.4% in first Q of 2026. Net profit margin has similarly improved from 10.9% the year before up to 11.5%, with costs remaining largely stable compared to the year before. Um, Well, in regard to throughput and RPOP, you will see a continual trend whereby the growth is mainly led through the growth in RPOP, in ARPPD. RPOP has grew by 3.3%, then ARPPD by 4.7%. And we have a industry-leading revenue intensity, and you can see that Siloam has strived to maintain that leadership positions by ensuring that year on year we continue to improve the gap between us and our competitors in regard to revenue intensity. So the revenue growth, as you can see, has been driven in large part through the growth in revenue intensity rather than through the growth in beds. But in regard to throughput, outpatient, inpatients, the growth have obviously been not as significant as the growth in RPOP. And bearing in mind, I said before, I mean, we are currently operating 4,000 out of kind of 8,000 beds that we built. I think at certain stages, obviously, be easy for us to switch to improving growth through bed growth and throughput because the existing beds are there. But I think in line with management strategy, the current thinking is to really look at improving intensity, which is what we believe is going to cement Siloam's competitive advantage and also ensure that we are working hard to retain the Indonesians who are going overseas, which again, we are seeing that those are bearing fruit. And increasingly, we're seeing a lot of testimonies of through various campaigns that we've run in the encouraging, for example, Indonesians to get a second opinion before they travel. We're seeing a lot of tractions coming out from that, whereby we are able to retain more and more Indonesian patients. And there's also another source of our revenue growth. Moving into working capitals days are steady, but currently sitting at about 8 working capital days. There's a slight increase, but I think this is more kind of a seasonal movement due to a lower productivity quarter. And operating cash flow remained largely healthy. The improvement, I think, in regard to year on year is especially significant when you consider the fact that Lebaran obviously has moved, right, from Q1 to Q2. So despite the fact that we are having a lower productive days, but in the fact that Lebaran is actually being felt in quarter one, but instead of quarter two of last year, revenue still grew by 8.4%. I think shows that the sustained the growth. I mean, when we were looking at from productive days perspective, we definitely see Q1 has sustained the growth compared to Q4, and that for us again, as I said, basically shows you that the strategy is working because the growth is sustained from quarter to quarter. I'll pass the time over to Sumanta, which will give you a bit more flavor as to some of the network improvement and business updates that is cementing our growth. Over to you, Sumanta.
Thank you, Dan. Good morning, everyone. So as you saw from Daniel's slides, that the Q4 momentum which we built up last year has continued into the quarter one of 2026. Our premium networks, which is kind of a very focused strategy, continues their growth through improved clinical acuity. And then how do we do that? And we have been talking about it in the last couple of investor calls. If you look at the bottom left, adding doctors, we keep on adding doctors. Even the last quarter, we have over the previous quarter, we have added a significant number of doctors. And on the bottom right, having clinical partnerships with leading medical institutions of the world across Singapore and Korea and Germany, and to name a few, which increases our clinical acuity as we go along. This has resulted in increased RPOP. I would focus on the top right quadrant, where you can see that this quarter one over the last quarter, the RPOP grew close to 3%. And over the 5 quarters, we have almost grown 11.5% of RPOP. So this is very much in line with our strategy of increasing our clinical acuity, because that's pretty much what we drive. Next slide, please. This growth momentum is strengthened by adding many firsts, especially in the area of medical equipment. Last year, we added the first Da Vinci Xi robot in Indonesia. This quarter, we added the first CT Linac in Southeast Asia. Bukaral will talk about it in a little more detail in a section. The first robotic knee, many CABG off pumps. So there are many firsts, and all the investments and efforts which we are putting on in what we discussed in the previous slide of adding doctors, getting in equipment, all that is resulting in a strong performance. The revenue grew by almost 9% in the bottom left quadrant, you can see. And on the bottom right, which you can see is driven largely by, Daniel Aaron spoke about it, by corporate insurance revenue, close to 10% growth quarter on quarter. Next slide, please. This is leading to more and more highly complex procedures now being done in Indonesia, so that more and more people are able to avail these treatments, complex treatments, without having to go outside the country. We completed 500 kidney transplants. That's pretty much an industry-leading figure and a fairly large number. Also, in cosmetics and CABG and chest pain ready hospitals, many firsts. So as a result, what we are also seeing that people are choosing to get their treatments in Indonesia rather than going out of the country, and this is beneficial for the Indonesian healthcare system as a whole. Next slide, please. We now got the second Da Vinci Xi in our Siloam Asri. That makes us the first hospital network in Indonesia with 2 units of Da Vinci Xi robotic system. And we will continue our growth in the area of bringing in cutting-edge clinical technology to Indonesia. Next, please. We launched the newest hospital, Siloam Surabaya, MRCAC, last quarter and over a few months it has ramped up to capacity. We are seeing great throughput and also premium patients from corporate and insurance preferring this hospital in that market. We are adding more and more equipment, and even shortly we will see the Da Vinci here also pretty soon. Next, please. Parallelly, we are also looking at upgrading the patient experience. Siloam Heart Hospital, we upgraded the lobby to global standards so as to ensure that the patient experience remains top-notch at Siloam hospitals, and we will continue this journey across all our premium hospitals. Next, please. Parallelly, for our value networks, what we are doing is the focus is about operational excellence, because it is about serving a large part of the community, and bed expansions. Over the last 5 quarters, we have almost added 9% additional beds in the value seeker segments, and we have seen significant, almost 16%, over 16% revenue growth, and a profitable revenue growth, with EBITDA also growing 14%. So this two-pronged strategy of focusing on clinical equity on the premium hospitals and a volume-driven growth on the value networks is serving us well, and we are seeing overall growth for the organization. Next slide, please. Every quarter, we are getting external validation of the work we do. So this quarter in the Healthcare Asia Awards, we won fairly big across multiple categories, and this continues and kind of gives us the faith that we are on the right path. And when it is recognized by third party saying that we are leading hospital groups within the country as well as in the region. Now I will hand it over to Bukaral to take over the next slides, please.
All right, thank you, Sumanta. Thank you, everybody, for joining us. I hope you can see that we are full speed on execution, and I hope that you're also seeing the benefits of the growth levers that we invested in last year. And I'd like to say thank you for supporting me and my management team during good times and as well as during challenging times. I'd like to take all of you and step back to our 5-year NGS strategy, going from a here and now conversation to taking a more futuristic lens to our business and operations. Because we're introducing a fourth pillar that we have been preparing for the past year, and we'd like to share it with you. And this is how it fits into our NGS strategy, which we've shared with you multiple times. We have our people first, we have our supercharging archetype pillar, and then we have a new pillar named Hospital of the Future before we have our Go Beyond. We believe this pillar is necessary because you can't talk about the next generation of Siloam, of healthcare delivery, without considering the technological advancements in our world today. We live in a world where humanoids, robots, gene editing, AI agents are no longer science fiction, and these innovations are changing healthcare at lightning speed. So what do? We see this as a unique opportunity to redefine healthcare delivery. We're not looking at it. We don't just want sorry, back please. We don't just want a layering of new technology and existing processes. We see this as an opportunity to reimagine a different healthcare setup. And so this is how we see it. Next slide. So we've put here that our objective is leading the transformation of healthcare in Indonesia that reimagines how healthcare is delivered, achieving operational excellence, superior clinical outcomes, and sustainable growth. So our goal is not just to be the largest or the first or the fastest for certain areas, but to be leading with the most advanced healthcare system in Indonesia and on par with global players. We've built a lot of digital capabilities over the past 10 years, with which we have shared on a lot. And I've actually also gone to a lot of conferences and speaking opportunities sharing about the digital capabilities that we've put in over the past 10 years and that we're enjoying right now. That has allowed us to scale, to automate, to optimize, and that's given us a huge advantage. Now, given our setup of 41 hospitals with a single unified digital ecosystem under one corporate umbrella, we believe we are in the right place to take the next leapfrog with AI and other technologies and reimagine a different healthcare system. So what does it look like? Well, nobody knows. It is a journey, and it continues to evolve, but we're planning for transformation through technologies in 3 areas. The first one is operational excellence. We believe that hospital operations will and should look very different, and it should deliver high quality care at scale, consistently, efficiently, and predictably. So the focus is scale, efficiency, and consistency or predictability. So what does it look like? Well, I've listed a few key initiatives here that kind of describes what it could look like and what it will look like. So the first one is an intelligent operations command center where all our systems, equipment, resources, people are integrated for an intelligent operations command center, real-time capacity, visibility, patient flow, resource optimization, seamless patient journey, end-to-end integration from access to follow-up, and also protocol-driven care to reduce variation and improve outcomes through standardized care pathways. Revenue integrity and smart billing is another feature of the operational excellence. We know that in any hospital, there is some amount of revenue leakage that happens. Well, with AI and a completely seamless digital system, then we can automate coding, we can optimize claims, and we can prevent leakage from happening. So that is one of the benefits the operational excellence. Also, unified enterprise data platform and optimization and automation of the workforce. The second area is intelligent medicine. Now, the goal of intelligent medicine is clinical excellence and clinical outcomes, to embed AI into care delivery to improve precision, speed, and outcome. Now, I've put another pillar here on frontier medicine. Frontier medicine differs from intelligent medicine because frontier medicine, our focus is clinical innovation, advance the clinical frontier through breakthrough therapies and emerging modalities. So what does intelligent medicine look like? Well, there are a lot of things that we can do under intelligent medicine, and a lot of tools that are available, such as AI-enabled diagnostics, imaging, pathology, early detection tools, clinical decision support for our clinicians. And ultimately, what we need to have is an AI native EMR that allows all of these things to flow naturally: predictive and preventative care, smart clinical flow. I'm not going to go through one by one, but this is the picture of intelligent medicine. Now, under frontier medicine, we're already doing a lot of things, and we want to continue pushing frontier medicine. So number one is clinical trials and early access programs. We currently are running 15 active clinical trials that are industry-sponsored clinical trials that provides early access to novel treatment options for our patients, for example. So this is one thing that we want to do more of. We've already invested a lot in minimally invasive and precision interventions, such as robotics, image-guided therapy, advanced endoscopy, and advanced procedures in other areas. The fourth one is an area called advanced therapeutic platforms that includes cell and gene therapy, immunotherapy, regenerative medicine, of which we are already starting to do some of. And also we would like to do more strategic innovation partnerships so that we can co-develop with global leaders in biotech, pharma, and academia. Now we want to go fast, which will be the big challenge for large incumbent companies like Siloam. That is why, coming back to the first pillar in NGS, we believe that people first will become so critical. We need to have the capability, but we also need to have an agile organization that with new capabilities that embraces change and is not experimenting, is not afraid to experiment and not afraid to fail. We have, in order to fast track some of these projects, we'd like to share also that we have signed with three strategic technology partners to build the foundational capabilities for the hospital of the future and spearhead a few pilot projects. So what will Siloam gain from pursuing the hospital of the future? Next slide, please. And how will we measure the success of our transformation? So a lot of benefits for Siloam, for our stakeholders, for our workers, and mostly for patients and our partners. The first one is the first of four clusters of outcomes that we believe that Siloam will benefit from. The first one is operational excellence. The focus is scale, efficiency, consistency, as I explained in the last slide. So we should see certain indicators such as cost per case come down, average length of stay come down as we are discharging patients earlier because care is more coordinated, bed occupancy rates coming up, and various indicators such as turnaround times come down. And staff productivity coming up. Clinical outcomes should improve if we are successful. Here, the focus is quality, patient safety, and patient outcomes. So our mortality rate should be coming down. Readmission rates should be coming down. Case-based outcomes coming up, and time to treatment matrix. And I have one example actually down below. Time to treatment matrix should come down, and people should be able to access treatment faster and with shorter waits. Data-driven intelligence is a third cluster of measurables that we expect to improve. The focus is data-driven real-time decisions and clinical advantages. And this is really important because at the end of the day, AI is a data science. And so if we want to use more AI, we need to see better data. And as we use more AI, we will also see better data and better analytics and intelligence coming from it. So the first one would be data completeness should be better, clinical decision support utilization, and AI adoption rate go up, and also interoperability of all the systems and equipment in our hospitals should be more and more interconnected over time. And of course, number 4 is clinical leadership. As we focus on frontier medicine, should also increase Siloam's or strengthen Siloam's clinical leadership as we focus on advanced care, innovation, and differentiation. So this is an area which actually should increase acuity even more, and also then links to our RPOB, which has been increasing consistently over the past few years. Number of advanced, specialized, novel procedures should go up. Clinical trials should go up if we are successful, and we should see more referrals coming to Siloam, and that in return, we believe, should also attract more talent to Siloam as well. So all in all, there are a lot of benefits for Siloam and creating a lot of enterprise value for the future by focusing on Hospital of the Future. Next, so at the end of the day, what I showed you is a framework. The Hospital of the Future framework is just the framework. And what we believe that what matters is impact. What matters is whether or how these advancements actually become reality and change life at the hospital, and most importantly, change outcomes for patients. We have a lot of ongoing projects right now, and we do encourage experimentation. AI is changing very quickly, and there are tools every month coming out. And so we encourage our teams to be using these tools and benefiting from them. You have already heard about the project that we launched earlier this year, Medical Scribes, that helps doctors take notes and frees up their time and allows them to focus on patients, and also gives us better data. We are rolling that out, and we are already now rolled out in 3 of our largest hospitals, which is Lippo Village, Kabanjarok, and MRCCC. And mid-year, we will roll out to another half of our hospitals, and hopefully to all of our hospitals by the end of the year. But there are a few other very interesting projects that I wanted to bring up. The first one is the Smart Hospital Project. As part of building operational excellence, we need visibility into our resources and manpower. You can't have a smart hospital if you don't have data feeding into the Smart Hospital platform. So we are implementing a Palm access system for doctors, staff, patients, visitors, basically anybody coming through our doors. So no longer need an ID card and no longer need to be doing tapping. And together with the smart CCTV system, we're going to be able to monitor every single movement in the hospital. That will allow us to monitor real-time flow, restrict access to certain areas, and ensure compliance for various activities. Of course, with all of this data coming in, we can also optimize where we put resources, where and what time, what days of the months, days of the week, and so that hopefully also make sure that our processes run faster as well. The second one is a smart ICU project, which we're very excited about. Again, the key is interconnectivity and interoperability of all of our devices. Now, this project connects all the devices in the ICU to a central system for full real-time data capture. Now, this is a big thing because number one, there's a lot of manual charting that happens in the ICU, taking up a lot of time from our workforce, distracting them from other things they could be doing. Now, when we roll out our smart ICU, there will be no more manual charting by our staff. And so nurses focus on patient care and communicating with their families. Data-enabled AI monitors patients and provides early warning alerts to ICU team on impending deterioration. So this AI never has to take a toilet break, never has to take a lunch break, never takes their eyes off of the data coming in. And so there's real-time monitoring and provides alerts to the ICU team if there is impending problems or deterioration to the patient. So this is real use case of predictive technology making care safer. And this is not so far in the future because there are a lot of hospitals in China that are already doing this. And so we're just wanting to take what we already see happening in other parts of the world, best practices, and implementing it in Siloam. And so this is an example. The last example that I want to give you on where we are transforming care and providing futuristic care, there is characteristic of the hospital of the future is the implementation of our CT Linac that we touched on a few earning calls ago. Again, this fits in very well with the hospital of the future because this is really two equipment in one, the CT scan and the Linac. So CT planning and radiotherapy treatment in the past was done in two different equipments over a 1 to 2 week period. Now, with the CT integrated Linac, it is done in the same equipment in one single session for the patient. So it's better experience for the patient, faster time to treatment, and it is obviously AI enabled. AI does the bulk of the grunt work for CT planning to assist the radio oncologists to make sure that there's minimal damage to peripheral organs and healthy tissue so that it is safer for patients. And AI also monitors treatment delivery to the patient and takes into consideration unwanted movements such as breathing, for example. And there is more and more equipment coming with AI embedded into it. And so this also helps us transform to a different kind of healthcare delivery. So this really wraps up this one section on healthcare of the future that we wanted to share with you. And we will continue to update you on how our transformation is unfolding and the partnerships that we are signing in order to provide better, safer care for patients that also provides enterprise value for Siloam as well. The last update that I wanted to share with you, just a short note on a hospital that we plan to operate in the next few months. We'll be opening in a few months Semarang Strondol as a value seeker hospital. It'll be a 150-bed facility, 10 times bigger than the current Semarang operations that we now do. We're very excited. And given the overwhelming interest from key specialists in Semarang, we've actually decided to upgrade a lot of our equipment. So this is a project to watch for everybody. And we believe that it'll follow in the footsteps of Gubang that you've already seen that is very strong and very positive. So in closing, you can see the whole everything that we've shared in our earnings call today. Great, very strong results for Q1 following from last year. Continuation of last year's initiatives translating into strong results and sustainable growth. And also you can see how we are investing consistently for future growth, such as Gubang and the Strondal projects, and also leading change by implementation of technologies and redefining future care delivery. So a lot packed into half an hour, but thank you for joining us today. And then most importantly, thank you for all of your support. And we are happy to answer any questions or concerns that you have. Thank you. And back to you, Albert.
Thank you, Ibu. So I don't see any questions open. Would anybody? Okay, there you go. You have a question?
Maybe let me take the first one. Yeah. So in regard to guidance, I think the important thing to highlight is that instead of giving you specific numbers, I'll go back to what I said before. In regard to, we do believe what you see in 4Q and 1Q, 4Q 25 and 1Q 26 will be sustained through the rest of the year. However, but bar unforeseen circumstances, I do want to add, however, in that we are living in a highly uncertain macroeconomic situations. So internally, we are also mindful of these issues and have done obviously various contingency planning as well around various scenarios. So I think in regard to 2026, there's a lot of macro uncertainty, but outside of those external factors, we do believe that the strategy from Siloam in regards to the archetype transformations would continue to see a quarter-on-quarter improvement, similar to what you've seen in 4Q 25 and 1Q of 2026. The higher complexity cases, I think the way we look at it is that we look at Congo UN cases. Yeah, we shared this acronym with you some time back. So cardio, onco, neuro, leading obviously all the way to Euronephro. But we are focusing on those Congo UN craft group, which obviously by default is higher complexity than your pediatric inpatient and so forth. And Congo UN basically now contribute over 50% of our revenue. The revenue contribution by archetype, maybe I'll let Sumanta answer that.
Yeah, so the way we look at it is, as I presented earlier, that for the premium archetypes, the premium networks will essentially look at ARPOB growth, and which we mentioned as over the last 5 quarters has been 11.5%. And from the value networks, we basically focus on operational excellence. So rough split, I don't have it right now, but I think we could share it later. But largely for the revenue intensity is largely in the premium networks. Rest to say that. You will take the next question, Daniel?
Yeah, sure. So going, what is the all right, I'm going to skip around a few of your questions. What is the insight on the margin expansion? Up to now, Ari, I'm maintaining my guidance of 30%. But the opportunity for expansion, I think, certainly there. It comes from a few sources. Internally, we have various projects that's ongoing where we look at improving efficiency through optimizing OPEX. Small little things like how do we reduce paper use, and to coming out to how do we optimize the rostering of staff in our hospitals, to looking at kind of procurement strategies and so forth. So there's a whole list of activities which are ongoing currently internally to look at improving margin. At the same time, I think as you see when we moved from the archetype strategy, whereby as Sumanta outlined earlier, whereby a lot of the growth are being driven by our premium hospitals, naturally you will see the margin expand from that as well. As I said, last year, there was a bit of transitional cost as we kind of moved to the new archetype. You have seen that margin has come back to where it was before, which is 30%. Certainly, the potential for it to move 30% is certainly there. But talking to me, I've always been a bit more conservative. For the time being, I will still kind of maintain the guidance for 30%. But certainly, the levers for expanding a margin is certainly strong. In regard to M&A, we are actively looking at M&A currently. But however, we are not just looking at doing M&A for the sake of doing M&A. Internally, management has done a very detailed planning in regard to where should we have a presence, whereby we do not, in which area are we lacking, not just in hospitals, but also in the kind of the craft group, the specialties that we're practicing in. And also we wanted to look for, as I mentioned before, profile that fits our target kind of a premium, high acuity segments. We have evaluated over 60 targets, actually, since last year up till now. But there's about 4 or 5 that is kind of in ongoing discussions. But as I said, we're not in a rush to execute it. Certainly, we're generating kind of close to 3 trillion of operating cash a year with a strong 14 trillion syndicated loan that basically we have a reasonably sized war chest in order to execute M&A. But we do want to execute M&A that is clearly very value accretive, that will be able to add to our EBITDA from day one. So management is being very careful and very diligent in its evaluations to ensure that we bring the right target in. In regard to FY26 volume growth opportunity versus revenue intensity, revenue intensity will continue to be a drive. And I think, as you said before, that is a differentiating factors for Siloam. That is how we're going to compete against hospitals in Singapore, in Thailand, in Malaysia, by ensuring that our complexity and the range of the services that we covered are just as good, if not better, than basically our Southeast Asian peers.
Daniel, if I may just add to the volume growth point. So in our premium networks, obviously, we mentioned newer hospitals that we are putting up, this Rondol that is coming up, and also the MRCAC in Surabaya, which has wrapped up really well. So there has been also volume growth through new hospitals. These two we are talking about at this point of time, and we will add more on the premium networks. And on the value networks, we have, as I shared in one of my slides, we have added almost 9% new beds. So bed addition continues, and that is on the back of our confidence to fill those beds. So volume expansion is there, but like we have always maintained, that clinical equity and revenue intensity of, especially in the premium networks, is what we are largely driving.
Yeah. Adding to that, I think the last kind of 3 to 4 years, as was mentioned, we were in a bit of a consolidation phase. So you see that the bed growth is actually very constrained and compared to others. I think you will see that starting to change. But we talk about Gubeng, Ibu Caroline has talked about Rondol. We definitely still have quite a number of hospitals, Mir, Chito, and Surabaya, for examples, that are in the pipeline. So I think what you will see is that the pace of growth but for bid will certainly pick up from this year going forward.
And we have a lot of brownfield as well, Daniel.
Yeah.
If I can add, so there are some hospitals that we are still able to add either beds on a bare floor or adjacent land, such as in Siloam Lipo Village. We've been adding beds. MRCC will be adding another floor of beds as well. Makassar we did last year, and that's starting to ramp up. So in the existing hospitals as well, where possible, and we are also adding facilities. And I think it's not just beds. When we think about capacity or volume growth, we shouldn't just be thinking about beds. But I think that we've also been adding capacity in our operating theaters. So in a lot of our hospitals, we're adding another operating theater, 2 operating theaters, and actually that helps with the RPOB, but is also improving volume growth for certain high acuity areas as well.
Thank you, Caroline. I'll take maybe the last question in regard to the free float. We have studied the free float requirements. At this stage, we're confident there will be no issues for Siloam to hit what's required by 2027 to get to the 15%. But the details we'll probably share with you when the time is right. But we're fully confident there will be no issues hitting that requirement for the free float. Okay, if there's no more questions, I'll hand it back to Albert to maybe close the meeting.
Yeah. So thank you, everyone. I think that's all our questions. With that, let me close the meeting. Thank you all for attending, and I'll see you guys again in the next earnings call. Thank you again.
Thank you very much,
Thank you,
everybody.
everyone.
Thank you.